We start with those extraordinary events at the White House, with Donald Trump introducing sweeping new tariffs on all imports into the United States. President Trump claimed America had been ripped off by foreigners for decades.
Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore.
So President Donald J. Trump is making headlines after he announced that he was introducing more taxes for everyone. On February 3rd, 2025, the sitting POTUS signed an executive order implementing what he called Liberation Day tariffs, imposing a 25% tariff on imports from Canada and Mexico, along with a 10% tariff on Chinese goods. The reason? Trump wants to hold Mexico, Canada, and China accountable for their promises to combat illegal migration and prevent the flow of fentanyl and other dangerous drugs into the United States.
A universal baseline tariff of 10% on all imports coming in to the US. That's the rate that will be imposed on the UK. The European Union has been hit with a higher 20% tariff. Donald Trump imposed an additional 34% tariff on China. That's on top of the 20% already announced.
Interestingly, Trump's so-called Liberation Day tariffs specifically target America's three largest trading partners. On top of that, Trump also brought down the hammer with extra taxes for the UK and the EU. He introduced 25% tariffs on all car imports to America, including from the UK, 25% tariffs on steel and aluminum imports, including products made from these metals, and 25% tariffs on many imports from Mexico and Canada. These new tariffs closely mirror Trump's 2018-2019 trade policies. Only this time, he's raising the stakes. During his first term, Trump imposed targeted tariffs on specific sectors, 25% on steel, 10% on aluminum, and varying rates on specific Chinese goods. Trump's bold trade moves undeniably disrupted the global economic order. We've got leading economists announcing that Trump's agenda and the resulting trade war will lead to inflation. A quick lesson for those of you who don't know: tariffs are taxes implemented on imports that are paid by U.S. businesses. Importers pass on a fraction of those higher costs to consumers.
Absolutely. I mean, tariffs, the way they've been levied, the vast majority of those percentages will be passed on to the American consumer. So essentially, it's a tax on consumers.
And the implications aren't encouraging. Trump's previous tariff measures sparked significant economic tensions and disruptions. When Trump took office back in 2017, the total U.S. trade deficit was at $570.9 billion. By the fourth quarter of 2018, the U.S. trade deficit increased nearly 20%, peaking at $684.1 billion. And that was the highest point since the Great Recession. So, fears of a global trade war or renewed inflation aren't unfounded. Mark Zandi, chief economist at Moody's, said, "I suspect by May, certainly by June, July, the inflation statistics will look pretty ugly."
Well, look, there's no question that Warren Buffett is right, that if you just raise tariffs across the board, then things will be more expensive. There's very little doubt about that. So Warren Buffett is right. If you manufacture something here in the United States, he's going to lower the tax to 15%.
It's unclear if tariffs will just be a one-time price shock or something that might stay persistent. However, one thing's for sure: people's wallets will take a hit. According to an analysis by the Yale Budget Lab, consumers will lose $4,400 of purchasing power in the short run. Preston Caldwell, chief U.S. economist at Morningstar, said, "I think it'll take some time for the inflationary shock to work its way into the system. At first, inflation data might look better than it will be eventually." Another economist, Ryan at Capital Economics, said that consumers in the States may see higher prices by May if Trump keeps implementing the tariff policy. In an email, he clearly stated, price increases take time to filter through the supply chain, starting with producers, then retailers/wholesalers, and finally consumers. Meanwhile, Zandi stated that food items would be the first to take a hit since grocers can't hold on to supply for very long. Zandi further stated that most physical goods, such as vehicles, consumer electronics, clothing, and furniture, are expected to be pricier by Memorial Day. However, according to Ryan, most retailers and wholesalers won't want to do this all at once. They would gradually increase the prices to avoid any major consumer backlash. But where do the tariffs leave Bitcoin? Well, according to some experts, it might be Bitcoin's time to shine. Why? Well, a trade war could lead to higher inflation and may weaken the US dollar. Zach Pandal, head of research at Grayscale, told CoinDesk, "I think tariffs will weaken the dominant role of the dollar and create space for competitors, including Bitcoin."
There's a lot of winning out there, and we're having a good day in the stock market, as you can see, an all-time record day, and hopefully it continues. I think it should. Our country's stronger than it's ever been, and somebody had to do that we had to take the medicine. We had to go through the operation, and that's what we've been through, and a lot of presidents would not have done it. No president would have done it, I think, but it had to be done. We brought everybody to the table, and it may not be a negotiation. It may not last. I mean, things may be asked that I think are not fair to us. Look, we've been ripped off by essentially everybody for 35 years. This is not just a new thing.
And honestly, that argument makes sense since Bitcoin has always been regarded as digital gold. People have always viewed it as a safe place to keep money when prices go up and things get more expensive. Like gold, Bitcoin isn't controlled by any government. And now that it's easier to use and more people know about it, investors might choose Bitcoin to protect their money during times of inflation. As for other cryptocurrencies, well, economists believe that tariffs will play a big role here. They're thinking that both the stock market and the crypto world could take a hit. However, the stock market might take a much bigger hit since it's directly related to global trades in terms of manufacturing, technology, and agriculture. However, as for crypto, it doesn't directly depend on physical trade or supply chains. But that doesn't mean it's completely safe. If tariffs lead to an economic downfall, investors might pull out of riskier assets like crypto. And that's exactly what's going on right now. Since Trump announced his new tariff policies, there were significant sell-offs. Bitcoin fell from over $100,000 to around $75,000. Meanwhile, Ethereum dipped below $1,500. According to the Crypto Fear and Greed Index, market sentiment shifted from neutral to extreme fear in the wake of the tariff announcement. That basically means that cryptocurrencies are still being treated as risk assets rather than safe havens. John Tataro, an analyst at investment bank Needham & Company, told Fortune, "This environment is very much a macro-driven environment. In the last 2 weeks, Coinbase and other companies I cover are trading mostly based on tariffs, expectations for fiscal policy, and a general either risk-off or risk-on sentiment." But most people are asking whether cryptocurrencies will continue to follow stocks in a risk-off environment or eventually decouple. In the past, when something big went down to shake up the global trade scene, crypto prices often moved in the same direction as the stock market at first. But after a while, crypto started moving differently because it follows its rules and trends. And that's exactly what leading experts are expecting this time.
So, for example, we had Corey Bates, who's a Bitcoin advocate and market commentator. He says, "This is actually wild to see. For the first time, Bitcoin is decoupling right before our eyes." And we had Eric Weiss, founder and chief investment officer of the Blockchain Investment Group. He says, "As the tariff war escalates and stocks bleed, Wall Street will eventually realize there's an alternative, Bitcoin. No earnings risk, no geopolitics, just math. The moment capital truly pivots, BTC doesn't just hold up, it outperforms dramatically."
However, some folks think otherwise.
when will Bitcoin truly decouple?
I don't think it will decouple, and it shouldn't decouple in the sense of until the end. So if you think about why is Bitcoin's correlation more closely tied to the stock market? Well, because more people that hold Bitcoin today have stocks. In the early days, there's a lot of people who, frankly, they just put all their money in Bitcoin. They didn't have stocks. They didn't care what happened in the stock market. Like, they were just like, I'm a Bitcoiner. I like Bitcoin. That's my savings tool. I buy all Bitcoin and I just hold it. That's not true anymore. Like, a lot of people who hold Bitcoin or are coming in to buy Bitcoin now, they have stocks. They have these portfolios. And so they think risk on, risk off. Do I sell all my stocks in crypto or do I go and invest in stocks in crypto?
However, we need to think about the response from the Chinese crypto community as well. Even though crypto is banned in the country, China's a big player in the crypto game. BitMEX co-founder Arthur Hayes believes that the current trade conflict between the US and China might cause a shift toward cryptocurrency investments. Arthur further claims that if the Chinese yuan continues to weaken due to these tariffs and the economic pressure, more Chinese investors might turn towards Bitcoin and other digital assets as a way to protect their wealth. Similarly, the Russian government might fall back on options like cryptocurrencies as it is a safer alternative for those who are looking to preserve capital. However, the higher production costs for mining equipment could backfire. In case the mining costs do go up, only big companies with a lot of money might be able to afford them. This could lead to a reduction in mining activity, potentially making Bitcoin more centralized and controlled by a smaller number of entities. Ultimately, Trump's new tariffs could impact crypto in two key ways. Initially, prices may fluctuate as investors react to trade tensions and fear-driven sell-offs. Since cryptocurrencies often mirror stock market movements, Bitcoin could experience a drop if panic selling ensues. However, over time, the dynamics may shift. If inflation continues to rise, Bitcoin could emerge as a hedge, with more people turning to it to protect their wealth. Additionally, experts suggest that a weaker dollar and lower interest rates might support Bitcoin's growth. With Bitcoin's independence from any single country, some believe it could perform well as governments struggle to stabilize their economies. But what do you think? Will Trump's tariffs help or hurt Bitcoin? Comment your thoughts below.